The next chapter we want to look at is dealing with these land uses, the controls and regulations that may exist with the land use. And I guess for the most part, what we're going to really be discussing in this chapter, if you own land, does anybody else potentially or any other entity potentially have any control over your property, how it's used, what you can do with it? Obviously, the answer is yes, especially when it comes to the government. So that's what we're going to be really talking about, taking a look at in this chapter, is what some of these controls and regulations are when you do own land. Okay, so you see some of the topics here. What are the government's rights? What are these public controls? Y'all, we're going to talk a good bit about this term called police power. Y'all, that's a big deal. Environmental hazards, and then there's some private controls we're going to be discussing as well as we go through. But let's first start with, what are some of these government rights? What kind of rights does the government have in your land? Well, the first right they have is the right to tax it. And they do, and they will, as long as you own that land. You're going to pay taxes on it more than likely. Now there may be some exemptions on who maybe does not pay property taxes, or at least some discounted rate for paying taxes. But for the most part, most people have to pay taxes if you own land. Well, how do these taxes work? How does the government decide how much to tax? Well, there's a term you see here called ad valorem. That's kind of an important term. It just means at value. So obviously the government does have the right to tax property, but they can only tax it based on the value of the property. So obviously, the more value your property's worth, the more taxes you're likely going to be paying. It really wouldn't be fair to say someone that owns a $100,000 home has to pay the exact same amount of taxes as somebody that owns a $1 million home, right? So what taxes are paid, it's based on the value of the property. That's what ad valorem means. Now, when it comes to these taxes, believe it or not, they're typically charged at the local level, the municipality that you actually live in. Because you got the federal, state, and then it breaks down into, towns, cities, municipalities. And, that's where most of the taxes are going to be coming from. Again, we're talking about property taxes, okay? So you see also a formula here to try to figure out what the tax rate is. And you can see where they determine your market value, whatever the value of your property is. And then they multiply that by what they call an assessment ratio. We're going to talk about how that's determined as well. And then times the tax rate. And then we're going to talk about how they determine the tax rate. And obviously all of this will vary from state to state. Some states charge much more than others. There are some states have no property taxes, okay? They create revenue for the state in other ways. So all this is going to, just keep in mind that everything we're going to be talking about here is really just in general terms. Won't be any specific rates for any particular state. Again, now when we get into the state-specific portion of this course, then we will be addressing how it works in your specific state. Okay, so moving on. So when we talk about tax rate, there's another term here you need to be familiar with, and that's called millage. And that's what tax rate is referring to, the millage. A mill is 1,000, okay, 1,000. And it says 1 mill represents 1/10 of 1 cent, 1 penny. 1 mill is 1/10 of a penny. So to look at this in a more generic way, it says $1 for each $1,000 of your assessed value. So obviously $1,000, 1 mil of $1,000 would be $1. Okay, that's how the millage, or what millage is. And again, that's how they determine what the tax rate will be. Again, this rate will vary, not only from state to state, but municipality to municipality. It's going to be different. It depends on what the budget for that municipality is. Okay. And then you see some examples of what some of these taxing authorities are. What you're looking at here is, at the end of the day, the municipality has to create enough revenue through taxes to pay for everything that has to be paid for within that municipality. Water, the fire district, school, libraries, you name it. This is not an all-inclusive list, obviously, but the municipality will come up with what they deem, this is how much we must create, how much we must take in taxes to be able to pay for everything that needs to be paid for. So that's the starting point. But then on top of that, you're going to have what we call both general and special assessments. Okay, and I think we kind of touched on this a little bit in the previous chapter, but it's a good review. But as a lot of times there are costs, there are expenses that come up throughout the year that maybe it was not budgeted for. Maybe it's something that we did not, or the municipality did not see coming up. They didn't know this was going to be an issue when they were establishing the budget. So we may have to spend actually more money than what was budgeted for. Well, again, it's still got to be paid for. So how do you do that? Because they've already determined how much we're going to tax people based on whatever they determine the budget to be. And now we're spending in excess of the budget. Where is that money coming from? Through a special, or in some cases, a general assessment. Well, how does that work? Well, maybe we had the example we use here, and I think is the same example we used in an earlier chapter, but maybe we have to redo a sidewalk along the street frontage. And maybe you live in one of the houses that are on that street. Okay, the sidewalk now goes in front of your house. And let's just say there was 10 houses that were on the street where they put in the new sidewalk. Well, again, they didn't realize or didn't take into account that we're going to have to put in a new sidewalk when they were establishing the budget. So this is going to be an extra expense. We got to get money to pay for it. Well, who's going to pay for it? Should the entire district or municipality pay for it? Or should those property owners that experience a betterment, are actually receiving something of value from the new sidewalk? And typically, the municipality is going to say, well, we're only going to assess those that actually experience a betterment. In other words, hopefully this would contribute to your overall property value because of what they're doing here. That's considered a betterment. So if there's 10 houses on that street that experienced a betterment, then those 10 houses are going to pay for this. Now, again, this is not something they typically ask or poll property owners. Hey, we're thinking about putting a new sidewalk in here, and we know that you would like to pay your share of it. Are you okay with that? They're not going to ask you something like that. It's funny how the state or the government works. They're just going to do it with the assumption you can't wait for them to do it and would love to help pay for that. You might as well love it because you're going to do it. You're going to pay for it. Now, so say it, I'm just making up numbers here just to make math easy, but say it was going to cost $10,000 to put in that sidewalk. Well, if there are 10 houses that experience a betterment, then that would come up to $1,000 per property, right? So when you get your property tax bill at the end of the year, you'll have whatever the normal taxes would be. You'll see it on your tax bill if you ever look at it. This is what your taxes should be. This is what you owe. But because there were some unforeseen issues that came up throughout the year that we got to pay for, and because of it you experienced a betterment, we're also going to issue a special assessment. In this case of $1,000 is your fair share of it, property owner. So you'll have your property taxes plus the special assessment. So a lot of times the taxes wind up could be quite a bit more than what you originally thought it might be, just based on these tax formulas. Because they have a way of creating a lot of assessments throughout the year. Funny how the state does stuff like that. Okay, so that gives you an idea of that. Now let's look at an example of how these property taxes are calculated. The first thing in this case, the county will determine, in this example, they've determined we need to bring in, let me back up. The county has determined that there's $100 million worth of property value in this county. $100 million. It seems kind of low, but this is just trying to show you an example of how it works. I'm sure most counties be a lot more than that. But if you added up the value of every property throughout the county, in this example, we come up to $100 million in property value. But then the county has also determined, again in this example, that we need to raise or charge or bring in $1 million in revenue, meaning taxes. So they've determined, based on their budget, it's going to cost them $1 million this year to pay for everything that needs to be paid for in this county. Well, we know that there's $100 million in value in the county, and we need to raise $1 million. So if you take, to figure out what that millage or tax rate will be, we take the revenue that we must take in, $1 million, divided by the value, in this case was $100 million, so we come up with a tax rate of 1%. So if we assess everybody in the county 1% of their property value, then that will create the $1 million revenue that we need. So again, if you think about it, obviously if your house is worth $100,000, you're not going to be paying nearly as much as the person that owns a house is paying $500,000, $500,000. I'm not sure if I said that right. Let me say it again. If your property's only worth $100,000, then you're not paying as much as someone whose property is worth $500,000. Because obviously 1% of $500,000 is a lot more than 1% of $100,000. So in a way, it's kind of equal, right? But everybody's going to have to pay the same rate. In this example, would be 1%. Now we got to take this a little bit further, because there are remember all these other taxing authorities we have to pay for. I remember the water, the fire department, the library, the school, you name it. There's going to be a lot of them. There'll be a laundry list. And I will tell you, again, when you get your tax bill at the end of the year, it'll have them all listed. Whatever those taxing authorities are, they'll all be listed here. And then each one of these taxing authorities will basically have their own budget. Here's how much we need. And then based on that $100,000 in property value, here's how much we'd have to assess each property owner to create enough revenue for each individual taxing authority. So in this example you're looking at, the city has determined they need to assess all property owners a half of 1% of their property value. That would create enough to run the city. But then they've also determined in this example, it's going to take 3% of your property value from each property to run the schools. Okay? So now you got to add all this together. And again, we just looked at 2 of these taxing authorities here in this example. Again, there could be a dozen or more. It could be a lot of them. But then we have to take each one of these percentages and add them all up. And you see if we add them together, remember the tax rate for the county we determined on the previous slide was 1%. And then we got to add the city mills a 0.5%. We got to add the 3% for schools. And if we add them all together, we come up with 4.5%, right? That's the tax rate. But then we got to convert the tax rate to mills. We need to come up with what we call the millage rate. And and again, so to do that, you just take that rate, 4.5% times 10, and so we know it's going to be 45 mills. Now, obviously, I'm going to tell you, or my guess is your mill is going to be a lot higher than this. But anyway, maybe not. I guess it depends on where you live. So we know the mills that need to be charged is 45 mills for each property owner. But then you got to convert that to a rate, and then we'll talk about that here in just a second. So let's see, now how does all that equal your property tax, or what you actually owe in property taxes? Well, let's just say, again, in this example, your property is worth $500,000. The county's determined the assessment rate's going to be 8%. Okay. Now let me just tell you, this assessment rate, that's not the same as the tax rate. All right. So be careful here, This is a little bit different term. The assessment rate, this is really the big part of this deal that really could be significantly different from one state to another. Okay. That 8% might be right on the money where you live or in the state you live in. That might be very high for some states, quite frankly, for a lot of states, and so forth. So again, this is just an example, but just know you need to know what your assessment rate is for your state. And again, we get into the state specific, we'll actually discuss what that rate is for your state. All right, so what are we doing here? You see a formula. It says you got to take the property value times the assessment rate, which in this case we know is $500,000. That's the value times the 8% assessment rate. And that gives us the assessed value of $40,000. Now y'all keep in mind, assessed value is not the same as market value. Market value is the $500,000. Okay? That's your overall property value. Y'all would consider that market value. But to be able to calculate what the taxes will be, we have to know what the assessed value is. And to do that, you just take the property value times the assessment rate. In this case, gives you $40,000. And then to figure out how much the taxes will actually cost, you take the assessed value, the $40,000, times the millage rate. Now remember on the previous slide, we already did the math and figured out how much the mills would have to be to pay for everything at the local level, right? So it was 45 mills. Well, to convert the mills, and by the way, you can't just use just the mills. In this example, 45. You've got to convert that to a rate. How do you do that? Well, mills, that's 1,000. that means you have to basically move your decimal point 3 places. So, y'all, and you see I got it 0.045, but just to get, if I can write this in here, y'all, if I've got 45 mils, to convert this to a rate, y'all, I know I got to move my decimal places 3 places. So I just need to add a 0 onto the end, or to the beginning, a decimal, make it 0.045, okay? Now, what if you had, say, 1,120 mils? Again, you would move the decimal 3 places, make it 1.120. So the key, y'all, to convert to a rate, and you need to remember this because you're going to have to know how to do this stuff. Y'all, to convert the mils to a millage rate, you just move the decimal 3 places, okay? So you see there, again, the assessed value, which is 40,000 times the millage rate, 0.045, indicates we're going to owe $1,800 in property taxes this year. Okay. Now at the bottom of the slide, I just added this to the slide. I don't think I put this formula in your book, but I think it would be a good idea to know that formula. So if you want to write that down, if you need to pause the video for a second, go ahead and do that, and then write this formula down. But y'all, it's a 2-step formula where you take the assessed value times the assessment rate. That gives you the assessed value. Then the step 2, then you take the assessed value times the millage rate, and that will give you whatever the property taxes are. So why does this matter? Because you're going to get some math questions dealing with property taxes, probably at least 1 or 2. Y'all, if you know this formula, y'all, all you got to do is they'll give you enough information. Y'all, in fact, y'all, if I know any 2 of those 3 elements, y'all, each step, there's 3 elements involved, right? If I know any 2 of the 3, and I know that formula, shouldn't I be able to figure out the 3rd? Yes. So, y'all, and one of the things I've always done when I'm taking an exam and property tax question pops up, y'all, I actually just write out the formula. I just write it out exactly the way you see it on the slide here. I write that out. Then I read the question, and as soon as I get to the part of the question that gives me one of those 3 elements, I write that into my formula. If it gives me the appraised value in the question, I write that into the formula. If it tells me what the assessed value is, then I write that in. Well, if they give me the appraised value and the assessed value, that means they're probably not going to give you or tell you what the assessment rate is. But I could do some math to figure out what that assessment rate is, and then I'll fill that in. And then I can start filling in the information on step 2. And again, they'll give you enough information, obviously, to figure out at least 2 of those 3 components of each step. Okay? And then, as long as you know that formula, there's no reason you shouldn't be able to do the math. It's just not that hard. I guess the hardest part is just remembering what that formula is. So there it is. Hopefully you've had a minute now to write that down. And so we're going to go ahead and move on. Another right the government has in land is something called eminent domain. Eminent domain is the right the state has to take private property for public use. Now, I'm just going to tell you, hopefully you're in a state that will not abuse this right, but in my opinion, there are some states that are totally abusing this law. In fact, I think they're probably not in compliance with the law. Because the way the law reads, the state can take private property. If they need your property or part of your property, Y'all, they have every right to take it via eminent domain, and there's nothing you can do about it, okay? But if they're going to take the property, y'all, there are two conditions that must exist. Now, before we even get into what those conditions are, and we're obviously going to talk about them, y'all, you see this term that I know we talked about in the previous chapter as well, this term called condemnation. Y'all, condemnation, y'all, this is the legal procedure the state will exercise when they decide to take property via eminent domain. The reason I want to make sure I bring that up is, y'all, again, y'all, on the state exam, they could use either one of these two words, and again, they're referring to the same thing. Y'all, they may use the term in the question eminent domain. They may just use the term condemnation. Y'all, it's the same thing. They're dealing with the same thing, so don't let that confuse you. All right, so what two conditions must be met before the state can take private property? Well, number one, it says the reason the state's taking the property must be for public benefit. Y'all, that's critical right there. But then number two, it says just compensation must be paid. In other words, they do have to pay you for it, and they have to pay you whatever it's worth. Now, is it possible that what the state has decided the value of what they're taking is worth, could that be different than what you were thinking this would be worth? Probably. Probably good chance. Now here's where you can argue or make an argument. You can argue the value, but obviously you can't just say, no, I think my property is worth twice what you're offering me. You're going to have to support that. You're going to have to be able to prove that. And one way to do that might be to get it appraised. Just make sure you let the appraiser know the reason you're getting it appraised. It is for eminent domain purposes because, and again, I don't want to get into the weeds here, and this is not for test purposes, but I'm telling you this is very common. In case you ever get involved in something like this, it might be important to know. But as a property owner, I'm not just concerned with just what is the value. Y'all, say they're going to widen the road in front of my house. So they have to take 15 feet. They're going to take 15 feet of my front yard, again, because they plan on widening the road. Well, as a property owner, my concern is not just what the value of that 15 feet they're taking. By them taking that 15 feet and putting a 4-lane or 6-lane road now in front of my house, how does that affect the value of what I have left? Right? Because depending on how much property I own, and you take 15 feet of it to widen the road, I might only have 10 feet between my front door and a major highway now. Potentially, but I say I'm making it up. I've actually seen it. I've actually seen where the road now goes right in front of you walk out that front door and fall down, you might be in the highway. That could have a very negative impact on the value of what's left. So when I'm doing the appraisal, not only do I want to know how much the property's worth you're taking, but I want to be compensated for how much it's going to devalue what you're leaving me with, right? So a lot that kind of goes into that, and again, I don't want to spend too much time there, but just wanted to at least make you aware of it in case you didn't already know it. But look, if the state decides they need to take it, they're going to take it. You can't. There's really nothing you can do about it. But they have to do it. But they have to make sure. One of the reasons they're doing it has to be for public benefit. Legally, the state is not supposed to be able to just take somebody else's property and give it to somebody else. Y'all, that's not for the benefit of the public. No, that would not work. But I'm telling you, some states are doing stuff like that, and the way they're justifying it or saying it's legal is because they're saying, well, yeah, we did take this property and we gave it to this individual. But the reason we did that is for public benefit, because what this individual's going to do, they're going to develop the property, whatever it is they're going to do, and that will make the property more valuable. That will create more tax revenue. And because of all the additional tax revenue, then that benefits the public. Never mind the fact that we just made potentially millions of dollars for this one person, this developer. Y'all, that's just wrong, in my opinion, okay? Obviously, my opinion does not matter one bit when it comes to any of this stuff, like probably yours won't either. But, y'all, this is why we got to be careful who we vote for, right? But anyway, y'all, that's what eminent domain is. Now, y'all, the last thing you see on the slide, y'all, it says the delegation of power rests with the State General Assembly to exercise the right of eminent domain. Y'all, I know they like to ask that a lot on the state exam. Y'all, where does the authority rest to make the determination if eminent domain will take place or not? Who has that authority? The State General Assembly. Y'all, if they vote and decide we need to take it, we're going to take it, then they're going to take it. But I would remember that, the State General Assembly. Okay? All right. Y'all, then we see this term called escheat. And y'all, escheat really takes place when you have someone that dies intestate. So first of all, y'all, what does intestate mean? That means you died without a will. Y'all, if you have a will and die, then that's considered testate. If you die without a will, that's intestate. Well, what are we talking about here when it comes to escheat? Well, y'all, if you die and you have no will, meaning you have not indicated who you want to get or receive any property you own, then, y'all, if the state cannot determine or locate what they would consider legal heirs. Now, y'all, supposedly, if there are legal heirs, whether there's a will or not, then the property will be left or maybe divided amongst the legal heirs. But y'all, believe it or not, this is very common when people maybe they don't have any legal heirs. And I will tell y'all, that is not unusual at all. There are no legal heirs. And they died intestate. Well, what are we going to do with this property? They never put in writing who's supposed to get it or what to do with it. Well, then it will revert over to the state. The state will take possession of the property via escheat. Another common term they like to ask about. So, escheat takes place when someone dies without a will, intestate, and there are no legal heirs that can be located by the government. Okay? All right. Police power. Here we go. First of all, what is police power? Now this is not like the sheriff's department, right? Or the police department. We're talking about authority here. Police power. But anyway, let me just give you the definition and we'll talk about it. But police power is just authority granted by the state. And it could be granted to a person, to an individual, to an office, whatever. But with this authority, whoever they granted this authority to, can now, they're in control or can more easily enforce laws, rules, regulations, whatever it is they've been put in charge of. Meaning with this authority, they can take any action they deem necessary to enforce whatever laws or rules or regulations that they're trying to enforce. Okay, so that's what they're talking about, police power. Now there are many examples of police power. We're going to talk about a few of them right now, and we start with these more restrictive powers that still fall under police power. But for example, when you get your real estate license, do you have to practice real estate in accordance with the licensing laws? Yes. Well, who would you guess has police power to enforce those license laws? The Real Estate Commission. Now, look, the Real Estate Commission does not write the laws, but they now have the authority to take any action necessary to enforce the law. They can fine, if you do something you're not supposed to do, they can fine you. They might revoke your license. And depending on how bad whatever you did, they could actually refer you for prosecution. You might even go to jail over it. Again, depending on what you did. But the point is, the Real Estate Commission does have authority to enforce whatever the laws are. That's just one example. Another example are these zoning laws, right? If you own land, land is all zoned to be used for a particular purpose. And if it's not zoned for the purpose you would, excuse me, if that land's not zoned for what you were wanting to do with it, then you're not going to do what you wanted to do with it. All land has to be used according to what it was zoned to be used for. You see, again, just some examples of some of the different categories involving zoning laws. This is not an all-inclusive list, but these are very common categories like residential, commercial, industrial, and so forth. But obviously, if you own a piece of property and it is zoned residential, well, are you going to put a grocery store on that property? No. You have to use the property for what it was zoned to be used for, for residential purposes, if that's what it's zoned for, and so forth. Now, a couple other terms here. One is that ordinance, because sometimes you'll even hear the term zoning ordinance. Sometimes you hear it called zoning law. Sometimes you hear it called zoning ordinance. Well, what's the intent? What's the purpose of these zoning ordinances? And it says the intent is to assure that the proposed land uses conform with the master plan. The master plan. Now, who has the master plan? Well, I'll tell you, in my opinion, that would be Jesus. He's got the master plan. But my guess is this will not be an option for you to choose on the state exam. The answer they're probably going to be looking for is the state. The state has the master plan on how all land should be used throughout the state. Now, supposedly, the reason for this plan is, or the way they come up with this plan is because the state has determined this would be the best use for property in each area, and that would create the most value for the property. Now, we'll tell you, the state is very interested in creating higher value for property. Okay, they want to be able to get the most value for all the property. So they will come up with this master plan on how you must use certain property to get the higher value. Wonder why? Because obviously the more value there is, the more taxes they take in. So, So let's talk about this master plan a little bit more. It's a document designed to guide the future actions of the community. And it presents a vision for the future with long-range goals and objectives for all the activities that affect the local government. Imagine that. Things that affect the local government. That's how they determine how the master plan should work. Now, is it possible that maybe you decide, let's say you've got a piece of property and it's zoned commercial. Now, when it comes to commercial, there are different classifications of commercial. You got like C1, C2, C3, and so forth. So, not all commercial properties considered the same. They actually break commercial out into different groups, different areas, and so forth, which is probably not a bad idea if you think about it. Because I will tell you, there are certain types of businesses that are not allowed in certain areas of town, or certain areas period, but certainly around town. And I'll just leave it at that. I'm sure y'all can try to figure out what some of that might mean. But anyway, but let's say I own this piece of property. It's zoned commercial, but it doesn't have the classification for commercial that I need it to be to do what I would like to do with it. Well, an option you may have here is, you could go in and request a variance. So now what does that mean? When you're requesting a variance, what you're asking for, you're requesting that the Planning and Zoning Commission rezone your property so that it could be used for whatever it is you wanted to do with it. Because I will tell you, as long as it's zoned the way it is, you can't do what you wanted to do. The only way you can do it is, you got to convince the government to agree to change the zoning. Okay, and you do that through a variance. And and the way it works, in fact, I need to say this too. Every municipality has a planning and zoning commission. Okay, so you have the state that creates the master plan. How all land must be used throughout the state. And then they will issue police power, right, to each municipality to regulate the zoning laws in their particular area or municipality. So you'll have in wherever you live, whatever municipality, city, town, whatever you live in, they will have a planning and zoning commission. And their job is to enforce the zoning laws, the master plan for their area. But you could, again, request, this would be a written request, and I will tell you, if you've never done anything like this, it could be quite lengthy. It's a lot of paperwork. It's the government. But if you can convince the government that what you're proposing to do would be in the best interest of the public, then they may very well consider rezoning and allowing you to move forward with what your plans are. But I will just tell you, if pretty much all you've submitted to them is what you want to do and how this is going to help or benefit you, you may not get much attention there. But if you can convince the zoning commission that what you intend to do would be in the best interest of the public, how this would better serve the public, now they may very well take a look at that and very well may grant you the variance. Now, what does that mean? That means they have now changed the zoning law for that property. That's what a variance means. Okay? Another term is this non-conforming use. And now this is a kind of a big deal here, and especially with us real estate agents, and you better pay attention to stuff like this. But y'all, it is very, y'all, especially where I live, and I'm sure this is common anywhere in the country. But y'all, a lot of times you will, y'all, as a city or town is growing, y'all start spreading out. Y'all, it's getting bigger and bigger and bigger. Y'all, eventually you'll have areas of town that will begin to overtake some residential areas. So you may have some residential homes that were built maybe in town or very close to town that are now being rezoned to commercial. So you could have a house up for sale, but it's now zoned commercial. Well, wait a minute now. So if I live in this house and then the commission decides to rezone my property to commercial, does that mean I now have to move out of my house because it's no longer zoned residential? No, you do not have to move out, because in essence you're going to be grandfathered. I think a lot of people kind of understand that theory. But because when you bought the property and started using it, you were using it based on what the laws were at the time you purchased the property. But at some point after you purchased, obviously they've now rezoned it to something else. In this example, commercial. Well, again, so you'll be grandfathered. Y'all, you can continue living there and doing whatever it is you've always done. Where this comes into being a big deal is if you ever, or when you decide to sell the property. Y'all, and this is even a bigger deal for whoever's buying the property, because now the property is zoned commercial. So could potentially, if I'm looking at buying the house, could I buy it and move in and live here? No. Y'all, that violates the new zoning ordinance. You can't do that. So, y'all, this is something as real estate agents, y'all, you better be careful of here. Y'all, you let somebody buy that house and they did not know that the zoning has now changed to commercial, and they bought it thinking they were going to be living there, and then they find out they can't live there. Y'all, they're not going to be happy, and I don't blame them. Y'all, I wouldn't be happy either. Y'all, that's just wrong. So, y'all, be careful with this non-conforming use. So, y'all, just to be clear, if you're living or using the property a certain way and then the zoning laws change, in essence, you're grandfathered, which means you can continue to use the property in what the county calls a non-conforming use. Because right now, the way you're using the property does not conform with the current law. But non-conforming use, y'all, it's not a problem as long as you still own the property. But y'all, I'm just telling you, if the current owner, for some reason no longer owns the property, y'all, because they gave it away, sold it, y'all, whatever, y'all, the same person must continue to own it, and they must continue using it the same way they've been using it to be able to get or use this non-conforming use, okay? And y'all, by the way, it could be the other way around. Y'all, I use residential versus commercial, but it could be any of the zoning classifications. It works the same way. So, y'all, hopefully you understand what non-conforming use is. But, y'all, I'm just telling you, you better be very careful, y'all, especially if you're the buyer's agent. But really, even the listing agent too. Because, y'all, isn't that something you should have to disclose if you're the seller and or listing agent? You better. Yeah, I'm telling you. Y'all, this stuff you got to look into. It's very important, and it can cause a lot of problems for those that are unaware of the zoning law changing. Okay?